In an ideal situation, I would have both. I would have both a line of credit and one of these high cash value life insurance policies. And if I have both of those, I can really maximize my cash flow, because the line of credit gets me, I can get access to that money instantly if I have it at the same place where I do my banking, same place I do my checking. I can transfer money instantly. With the life insurance policies, it takes a couple of days at best in order to transfer money into it, and then another couple of days to get the money out. And there could be some processing in between that. So you're not going to be able to offset interest charges in just a few minutes like we can with a line of credit. So with a line of credit, we can really take advantage of every dollar that flows through our hands. And that's when things can really start humming. Chris, your lines of credit are coming into almost bearing interest rate. Refinance or what? Meaning the interest rates are high. They're business lines with 0% for 12 to 18 months. Oh, okay. You must be talking about credit cards. You must have some business credit cards with 0%. Correct me if that's not the case. I would absolutely look at refinancing if it's credit cards at 0%. So my recommendation would be to get a business line of credit if you can. Not just a business credit card, but an actual line of credit that you can put money in and take it out. Okay? Those are the best tools to have. Absolute best tool to have. And if you get a line of credit like that, you can use that line of credit, and the last month of your 0% interest on your credit card, you can pay off that credit card, bring that credit card balance to 0, and then go apply for another one. And when you get the next one and you got 0%, you can start to use that for all of your purchases and just build it back up at 0% until that one runs out. And in the meantime, all of your income gets into the line of credit and offsets that interest. So you took that credit card balance, you moved it into the line of credit, which the line of credit does not give you free use of money. You might be paying 6 or 7 or 10% interest on a line of credit, but that's okay, because you're going to take all the income from your business and you're going to offset it. And you're going to bring that average daily balance down really low. So the overall cost of that insurance is not going to feel like 6 or 7 or 10% interest. It's actually going to be more like 1 or 2 or 3% interest. And when you need to pay your bills, you do that right out of the line of credit. This is what I call dynamic banking. And by utilizing your line of credit that way, it allows you to maximize the use of your credit cards, allows you to get the most rewards. You get to utilize either the 0% interest, or in the case where there's no 0% interest, you get to utilize that 30 days of free use of money. Because if you pay off that credit card every month, there's no interest charges. So we always want to maximize the use of every dollar that flows through our hands. Those lines of credits are awesome for being able to do that. And any business owner should take advantage of that. Because as a business owner, you don't get to see near the benefit of all of the dollars that flow through your hands. When I had my pressure washing and window cleaning business, we had $300,000 go through the business hands in a year. And only a tiny part of that would come out as part of my benefit. I would plow the rest of it back into the business. I'd only take out a little bit from my paycheck. And so I didn't know about this at the time. And so I didn't put that $300,000 to use. I only got the personal benefit of a small portion of that. Whereas if I was using dynamic banking and infinite banking, I could have put all $300,000 to use on my personal side and on the business side in order to take advantage of every one of those dollars, however short, however little bit of time it flowed through my hands. I could have put it to use. So I spent a lot of money on gas every week. Okay, probably like $1,000 a week in gas. Okay, because we did a lot of pressure washing and a lot of driving. So I would get paid, and I would have to spend that money on gas, $1,000, right? So I might get paid, and that money might sit in my account for a few days, and then it's going to go out and it's going to pay a bill. It's going to buy my gas. It's going to pay for repairs, whatever the case may be. Well, back then I would just get that money and it would just sit in my checking account, and then a few days later it would pay a bill. Had I known how to do dynamic banking, and had I utilized a line of credit instead, those 3 days that $1,000 is sitting in my account before it goes out and it buys all the gas I need for that week could have been offsetting interest charges. 3 days, 5 days, 7 days, maybe 15 days, however long that money sits in my account. I'm offsetting interest charges, and that's saving money every single day.
Hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time.
Now go maximize your cash flow.